GM. Welcome to Web3 Academy, your one trusted source to capitalize on the next big phase of the internet. Don't get caught in the hype cycle. I'm Jay Bird, joined by my co-host Kyle Reedhead, and we believe that Ethereum futures ETFs are the start of changing the world, and that's why we're carving a path for doers to confidently build and invest in Web3.
I was almost like, this might be the first one I don't agree on there. But anyway, we're going to talk a lot about ETFs in general. So much going on in that world. And then we're going to talk about Draftkings, who is really making some noise right now. Fantasy football is just a killer app, I think, especially when it goes on chain. Some upgrades into the UX and usability of blockchain. We'll talk about that, specifically what Farcaster is building. That might be something cool for the entire ecosystem, as well as OpenSea, doing some really cool things. Talk about a big raise, $24 million from a on-chain consumer app, which is on Base. I think American Express is involved in that one, so that's a big deal. We'll dive into that. SBF Trial starts today. I know, or started, was it yesterday maybe? Not something we really want to be talking about, but you know what? It's kind of interesting, so we'll cover that. And then so much more. It's going to be a great episode, so I'm excited to be here.
I appreciate that you didn't slam me on the ETH futures ETF changing the world. I know that you love to say that futures ETFs are paper garbage. So thanks for being gentle on me there, Kai. Okay, before we dive in, and I'm excited about today's show, by the way. There's a lot of good stuff. Let's share some gratitude. Kai, I will go first. I am grateful for my mom currently visiting my parents. Sam, myself, Jack, and Potato, we're all visiting my parents in Toronto, and we've been having a tough go. Anyone out there who has kids, Jack is 4 months old, and he is not sleeping well. It's been a rough past month, and now staying with my parents for this week, it's been super helpful because my mom has just like stepped up and been so helpful during the days, giving Sam time to nap, taking Jack in the mornings, dream feeding him at night. Don't know what I would do without you, Mom. Love you.
Gotta love the moms. Gotta love the moms. I am grateful for a best friend of mine, Dave Ferris, who got married on the weekend. This is why I was not on Monday's podcast. I was actually in the wedding, and it was a beautiful wedding. So much fun. He had, was it 8 or 9 guys in the wedding party? So it was a bit of a shit show, but yeah, it was big. He had 20-something guys at his bachelor. It was insane, but beautiful wedding, and congrats to him. Still a bit shocked that he's married, to be completely fair, if you know who Dave Ferris is. But I hope his wife is listening to this. I don't think she would be. But anyway, just grateful for that weekend with them.
Oh, that's great to hear. Some exciting news on our end out of Web3 Academy. We are hiring. We are looking for a new writer to join our team, somebody to help with all of the content that we produce, our newsletter, our articles, our courses, our Twitter, our Discord, all across the board. We're looking for a new team member who loves writing and is super passionate about Web3. So if you are one of those people, if you want to join Web3 Academy, if you're looking for a full-time gig in the blockchain Web3 crypto space, this might be your opportunity. So check out the link in the show notes. There's a job description as well as steps on how you apply. And yeah, we'd love to have you be the newest member of the Web3 Academy team.
Come on, writers, buckle up. We need you. It's not new. Raul's still here. Don't worry. We just need another one. That's all. We're preparing. Bull market's coming, and we need someone passionate about Web3. So make sure to apply.
You know who else is passionate about Web3 is our partner, Paragraph, who is just absolutely crushing it on the newsletter side. So before we jump in, let's just take a minute to hear from them. Modern newsletters are built on Paragraph. That's right. Paragraph is a brand new newsletter platform that combines the best parts of Web 2 and Web 3 to supercharge newsletters for both writers and readers. Build a community, not just an audience. Paragraph uses blockchain tech to allow readers to collect and own the words that matter to them. This takes reading a newsletter to the next level. With Paragraph, readers can mint, collect, and show off quotes from their favorite newsletters. This opens new possibilities like creators sharing revenue with fans. I also love their new feature, Paragraph AI. This integrates GPT-4 natively in Paragraph to create, edit, and improve your writing effortlessly with one click. And guess what? We at Web3 Academy are on board and have already moved our content over to Paragraph. We believe this is the future of newsletters because of the profound engagement it creates between creators and fans. So, whether you're a creator, writer, or an avid reader, it's time to check out Paragraph and capitalize on the opportunity of being early. Welcome back. As we always do, start each episode with a little bit of market watch. Kai, what have you got your eyes on in the market this week?
Yeah, I mean, today's market watch is all about the ETFs. It's really the only thing moving markets. We've been pretty stagnant in terms of price for a while. I do think that will change soon. So this past weekend on Friday, I guess it was, and we recorded on Thursday last week, as we usually do. And we said it's likely the Ethereum futures ETFs were going to get approved probably on Monday. What ended up happening, I think, on the Thursday, pretty much a couple hours after we recorded. So that went through. 9 of them ended up going through by the beginning of this week. So 9 Ethereum futures ETFs are now approved, which is great. I mean, the market pumped and then the market dumped, as usually happens. So we're back at square one where we were before. So not much on the market watch front, but let's talk about these ETFs. Futures ETFs, as we talked about at the beginning of this episode, are not the greatest thing. You don't actually the company doesn't have to actually buy the ETH, so it doesn't move prices by any means. What it does do is legitimize the space, though. So this could not have gotten approved if ETH was a security. So this is very legitimizing for ETH, the asset, which I think is very exciting. It also puts Ethereum's name in front of, institutional investors, in front of TradFi. So I think that's a really big deal. So that's really good. So we'll start there. The reason why all this got approved ahead of time, by the way, is because of the government shutdown, which I don't think ended up happening.
They passed a 45-day emergency budget. So they might shut down in 45 days, but they're not shut down for now.
Okay. Well, so anyway, these all went live. A couple things. First, the first day was not so great. There was $2 million in volume and trading volume, which, I think it was over 100 million for when the Bitcoin futures ETF went live. Now that was back in the middle of the end of the bull run. So very different time. 2 million is pretty tiny. However, it is quite average for new ETFs. So it's not the end of the world by any means. It just wasn't huge like some people I think were hoping. 2 million in volume. There's shit coins that are below the 100th token on CoinMarketCap that get more volume than a day on Uniswap. So it's pretty small. But again, people don't care much about futures, especially people that care about Ethereum, right? So they're all waiting for the spot ETFs. Now, this week, they've started to pick up a little bit. So I think we're at about 20 million. This tweet that we have up on the screen here is a couple days old now. But I think we're just over 20 million now in terms of trading volume across the 9. So it's not terrible by any means. It is picking up, but we'll see if it really gets a lot of excitement or not. The big thing I think that this really does is sets us up for the Ethereum spot ETF, which will happen probably after the Bitcoin spot ETF. And those will be the things that probably will get a lot more volume and should really light up this industry whenever that happens, which I'll talk about in just a second. But first, the big interesting thing that I saw from this was VanEck, which is the first one to get approved. They're a big ETF TradFi company. They were the first to get approved. And what they did is they actually announced that they intend to donate 10% of their profits from the Ethereum futures ETF to Protocol Guild, that's it, sorry, which is a guild that essentially helps to fund Ethereum core developers. So really cool to see a TradFi company taking I've never seen this before, taking profits and giving it back to the community that built Ethereum and that continues to build Ethereum. So really, really cool. Obviously, they're plugged in and really get this space because this is what they're doing is great, but it's also, I think, probably a bit of a marketing ploy here to spread this out to the Ethereum community. Obviously, this thing got a lot of traction, a lot of shares, 1.2 million views, this tweet. So great marketing. If we go to the next tweet, even better marketing. They had low volume, like as we said in the first day. And so they tweeted out low volume in all caps and said, just like your JPEGs. And that got 1 million views. So they're just, whoever's their Twitter person is just crushing it right now, having some fun in the crypto Twitter world. And it's good to see TradFi having some fun and kind of, legitimizing Ethereum once again. Now, some other big news that came out. So the same day that these Ethereum futures ETFs were passed, all of the Bitcoin spot ETFs were once again delayed. We were hoping they would go live in October. We said there was a certain % chance they would. They're all getting delayed, and they were delayed ahead of time. So they didn't actually have to be delayed on that date. But again, they were delayed because of the potential shutdown. Now, the good news that came out of this is Eric Balkunas, who's the ETF guy that's got all the inside scoop. he's actually tweeted out saying that even though they've delayed all the Bitcoin filings, which is another, I believe, 45 or so days, maybe a little bit longer than that. I think it's the first week of January now when the next answer has to come. What the SEC is doing is actually contacted all the companies that have filed and is working with them to address some of their filings. So some of the like plumbing and legality of what they've done, which is a really good sign. It means that the SEC is actually helping them kind of figure out, cross their T's, dot their I's to get these things actually through. It doesn't mean a guarantee, but it really increases the chances of the next time they have to make a decision of it getting approved, which could be at some point in December or could be early Jan. I think it's like Jan 2 or Jan 3. So this is very different. Last time Bitcoin spot ETFs tried to get approved, it was just delay, cancel. Like there was just no silence. Like it was just all silence. There was nothing. Now they're actually working with them. So this could mean really good things. I think we said before it was a 75% chance that the Bitcoin spot ETFs would get approved in 2023, and then something like a 95% chance in 2024. Probably going to be first week of January. If it does, that's our next chance. If not, then it has to be by March. So otherwise, they're canceling it all, which I just can't see happening at this point. Someone from BlackRock came out and said it's for sure happening the next 3 to 6 months. And someone from another company, I forget which one, says they still think it's happening this year. So we'll see what happens here. But I think overall, we're seeing a lot of good things happening with ETFs. And then the last thing, as I said, with Ethereum futures ETFs, that's not a big deal, but that opens up the door for ETH spot ETFs. And we've already seen Grayscale, who has filed to convert their Ethereum Trust ETH into a spot ETF. So we already have one out there. I'm sure there'll be more that will follow in the coming weeks, but likely Bitcoin spot ETF gets approved. If that does, there's no reason ETH doesn't, because ETH is now basically on the same level as Bitcoin in terms of if it's a security, because they both have a futures ETF out. So it's looking like good things happening. We just don't know exactly when.
Yeah, super bullish, man. Like this is all great news. It's so funny when news like this comes in a bull market versus a bear market, right? Like this news came in a bull market, prices would be soaring, everybody would be going nuts, people would be so excited, but it's in a bear market, so it barely moves the needle. But as you said, Kai, this brings so much legitimacy to the major cryptos and ETH and Bitcoin, and we are knocking on the door of the spot ETF for both Bitcoin and ETH at this point. Bitcoin, as you said, for sure within the next 6 months. ETH, I'm sure, could come at the same timeline. After. Tough to say exactly, but man, very, very bullish. Love it.
We're going into this next cycle in just a completely different place than we were back in the cycle of 2020. Like in terms of, we had no ETFs back in 2020 when that last bull run started. We had no layer twos. We had no functional L1 blockchains for the most part. Like Solana and all them were not really a thing until later in 2020, more like 2021. NFTs were not a thing in the last when the last bull run first started. Do you know what I mean? On-chain consumer apps was not even a word. Those didn't exist. Didn't have things like friend tech and other things we're going to talk about. Like the world we have now is just so
didn't have account abstraction or MPC tech, which allows wallets to be basically abstracted away. Like didn't have
public company like Coinbase.
It's amazing how much it's such a view of psychology. Like we are all so down right now, and you get caught up in negative sentiment. I had a call the other day with a builder in the space who's been in the space for years. And man, he seemed so sad. Like his vibes were so down. And this is like a really respected builder in the space who everybody here definitely knows. If you're listening, I'm not going to mention his names, but he was like sad. And it's because it's been a long, year? It's been a rough,
longer than that, almost 2 years now, right?
I guess
it's been down only since November. We're starting on our way up since basically November of last year. But
so it really shows how much psychology impacts markets, right?
Right. Because the tech is just so far ahead of what it used to be. The legitimacy in most of the world, maybe not so much in the US, but it still is. Like we've got Coinbase public company, we have all these ETFs, like the legitimacy even is moving along. We still need some regulation, but like overall, I mean, we've made just huge strides forward since a couple of years ago.
And our next stories, basically all the stories that we have from here on are all about great businesses, great stories that are happening in the space. And none of them are, well, I shouldn't say none of them are speculation based. The next one we're going to talk about is actually big time speculation based. Let's jump in. So I want to talk about Draftkings Reignmakers. So Draftkings Reignmakers, DraftKings, if you don't know DraftKings is one of the largest sports gambling sites in the world, in America particularly, and it's fantasy sports gambling. And the NFL season started a month ago. NFL, one of the biggest sports, if not the biggest sport in America.
Go Cowboys.
Hundreds. I got the Jags in my pool this year, so go Jags. It's not the most exciting pick.
Weird.
And so DraftKings Reignmakers is DraftKings' new product that's an NFT-based product, and it is absolutely crushing it. So if we look at the NFT leaderboard over the last 30 days, DraftKings Reignmakers is number 2 on the leaderboard with over 21 million in sales. That's above CryptoPunks, that's above Mutant Apes, that's above Bored Apes, that's above all the like PFP community NFT projects. The only one it's below is below D-Market, which is, you know who D-Market is? D-Market, it's a gaming marketplace that they build games, mobile games, but their biggest game is an NFL game.
Right.
You could see how, NFL is taking over. But basically,
look, the width is so rare, which is also football.
Which is what the other
soccer, I guess. Yeah, right.
In the last month, DraftKings Reignmakers, since it launched in September, this is its second year, has 30,000 unique users, over 22 million or 21 million in volume. And already this month, in October, they've got 10,000 unique users because basically they have drops every month, every week is how it works. So it is growing in size. Now, as I mentioned, it's a NFT-based fantasy game. So basically each week they have packs that you can purchase, and in those packs are different rare cards, and then you collect these cards and you build a team. You could also buy these cards on secondary. You build a team, and every week you take your team and you compete against others with your team. Now, why would somebody want to do this? Well, the number one reason is that there's $30 million in prizes up for grabs over the NFL season. Last year,
and because it's fun to yell at your TV because you want players to, like, fantasy football is a weird game because, like, you want the weirdest things to happen. You know what I mean? Like, the team will be up by, like, whatever, and you're like, throw the touchdown anyway, even though you should just kneel it.
It has nothing to do with cheering for teams. You're cheering for, like, players. So people are going to play for the prizes, the big prizes, and DraftKings, the regular fantasy app, also has big prizes, but there's a lot less people playing Reignmakers. So I think most likely a lot of the DraftKings regular users are saying, oh, wow, there's a bigger opportunity to make money because there's less people playing Reignmakers, so I'm going to go over there. So that's part of it, is the prizes. The other big reason why people are playing DraftKings Reignmakers is the opportunity to speculate on player value throughout the season. And this is something that you could not do before blockchain tech, right? So the way this works is when you get a player, when you purchase a player and you get them through these packs, and these packs cost, I think they're $40 a pack.
These 10 to 100. There's a range, I think.
There's a range. Is there a range? Okay.
I think, yeah.
They're selling out very quickly. And you open the pack and you reveal and you have a rare card in that pack. Well, these rare cards are selling for, and like upwards, the highest one I think so far this season went for $40,000. Somebody paid basically $40 in their pack. They got a card that they then turned into $40,000 in return. So now obviously that's only one card that sells for that. And I think that there's something like 70 or 100 cards somewhere in that range have gone for over $10,000. So there's big sales coming on the secondary. But here's the thing. Maybe you don't get a player in a pack. Maybe you buy them on secondary, but you buy them early in the season. They're a rookie, they're unheard of, no one knows them. Throughout the season, they get really good and their value increases. As a result of their value increasing, now you can get return on that. You made a bet on a player early on and they got better. Well, you can sell them for more later in the season. So that opportunity to speculate is a big part of that's what sports management is all about. And fantasy sports is all about pretending that you're a manager yourself. Well, here's finally a way that you can benefit from an increasing value of a player.
I wonder how they deal with, like, let's say I have a bunch of money and I buy all the best players. I get Patrick Mahomes, I get Travis Kelce, I get like all the best players. And then do those carry forward to the next year? Or
No.
do they find a way? Oh, is it only 1 year? Okay, that makes sense.
Only 1 year.
Right.
Yeah. Every year it starts fresh.
And what they need to do is find a way to like still reward the utility of those things. So does it just go to zero then, all those NFTs, once that season's over?
Yeah, I don't know what the utility is obviously in the season. So like it just becomes a sentimental collectible at that point.
I guess, yeah, true. I guess that could be it.
Right.
Interesting.
I mean, I guess DraftKings could decide to do something for you.
That's what I mean. Right? I would think that they will, but let's see. I mean, the one thing to keep in mind with this, so when you mint the packages, they are minted as NFTs. As you trade, so like the volume we're looking at, it's not actual volume happening on chain. It's just happening in DraftKings database, basically. And then they're reporting that data over to Polygon saying, hey, we moved this much. But like, there is no actual wallet. You don't actually own these things. There's no self-custody yet. Now, I know some people are like, this is not Web3, blah, blah, blah. I think the reason why this is smart is DraftKings needed to test and see if this thing actually makes sense. Do people want to do it this way? Do they want to use this new style of fantasy football? And I think if they found product market fit, if a bunch of people actually came over, started using it, like, wow, this is actually more fun, then they can go and build the tools needed to do this properly on chain, right? You think of like Reddit. They did the same thing. They had a wallet, they had the vault. You could get your avatars, but you couldn't do anything with them. There's no marketplace, et cetera. They needed enough people to have product market fit to then go and build that. They needed to make some revenue, get people, just make sure people actually want this. And so DraftKings, I think this is why the way that they've done this, they've been able to make this game work for, what did you say, like 30,000 people? I think it's actually like 100,000 total users. And it works no problem. There's no issues. And it's because they don't have to deal with a lot of the blockchain tech, just minting and then leave it. You don't have to worry about people securing their assets, teaching them about wallets, like all that stuff. So like this can go mainstream this year, not next year, but this year because the tech is ready in terms of not using blockchain tech. Now, if it works, they can go out and this year build a marketplace now. They can, because they're going to make a bunch of money from this game. They can build proper wallets and using account abstraction. They can do all the things needed to make this game work fully on chain. And so at any point, they can just go, hey, everyone, you now have a wallet embedded in your account. We've placed your NFTs in that wallet, and now it's on chain. You're good to go, right? So I think it's just a stepwise process. And I think we'll see this with more and more companies. It's a smart way to do it, in my opinion, even though I know people are like, it's not fully on chain, don't love it. I think as a business, especially a big business like DraftKings, you got to prove market fit before you go and just, it's a lot of resources to build your own marketplace so that they can get some royalties off it and build a wallet and make sure people don't lose their assets. Like that would suck. And so I think the way they're doing this is actually quite smart. We'll see if they continue to put things more on chain, but that's my hope.
Yeah, I agree. It's a great take. Let's talk a bit about some UX, some stuff coming out of Farcaster and OpenSea, tools that are looking to make it easier to interact with Web3. Tell us about what Farcaster launched this week, Kai.
Yeah, so Farcaster's launched two new things, actually. This week, they launched something called Passkey, which I'll explain what that is in just a second. But they've also launched a thing that allows you to think of like when you lose your password in your typical accounts and you can click forgot password and then it sends you an email. Usually you got to put in some code or recreate your password and boom, you can get access to your account again. We don't have that for wallets, right? If you lose your seed phrase for your wallet and you lose the password to it as well, you're just screwed, right? So you can't access that wallet again. It's just gone. And whatever's in it is also gone. And so imagine you had a social account. Imagine your Twitter account. You lost the password, aka you lost your seed phrase, and you just never can get into it again. That would really suck, right? And we have no solution to that yet in the blockchain world. So again, if we're going mainstream, we need to find a solution to that. So two things that Farcaster has done for this. The first one is what's called a passkey, which is basically you can just upload your seed phrase into iCloud, so iCloud keychain. And so it's basically, you still control it. It's in your iCloud and it's secured by like Face ID and stuff. Is it perfect? If you had $1 billion in your wallet, would you use that? Probably not. But like for most things, like your social account, that's a pretty good way. It's very unlikely and almost never, I feel like that iCloud has been hacked. So you're probably all right on that one, right? But again, if it's your vault of all your money, don't do that. But the other thing they did is actually quite interesting. And so this is called, I don't even think they have a name for it yet, to be honest, but it's just a way to recover your Farcaster account. Let's say you have a wallet, okay? And that wallet has like an identifier for your Farcaster account. So your wallet A is attached to your Farcaster account. Well, what you can do is, I mean, if you want, you can switch your Farcaster account to any wallet at any time. You have the ability to do that through your own wallet. But what if you lost access to that wallet? What you can do is set up like I'm not sure what the name of it is yet, but basically a friend, or it could be another one of your wallets. Maybe it's your Vault wallet, to have not access, but to have what do you call it? Like basically be a point of contact for that wallet. And what you can do is say that if I ever lose this person can ask to take control of that and move the ID of your Farcaster account or whatever to another wallet, okay? Now, the way it works is this. I set my partnered person, my partnered wallet, and at any point, that partnered wallet can sign a transaction on chain and say, hey, I'm going to take control of this, or I'm going to move the account to a different account. What it does is it doesn't just take control. Otherwise, that would be a problem. Someone could just literally, like a friend could screw you over. It has a 7-day window, and you have 7 days to disapprove or cancel that transaction. Now, if you cancel it, then you're all good. It doesn't actually happen. Then you can, if they're a bad actor, you can just remove them off it, and now they're no longer able to do that. If you don't do anything over 7 days because you've lost your account and you can't do it, all of a sudden they can move it over to another wallet of yours or to their wallet, and now you can access that account again. So the 7-day window is the thing that really makes this work. If you didn't have that 7-day window, anyone could just come and really do that if you happen to add them. But that 7-day window makes sure that you can approve it. And of course, if you don't have access to it, there's nothing you can do. And so all of a sudden it gets switched over. So it allows you to put like a trusted person to help you recover your wallet if you ever needed it. So pretty good idea. This works on Farcaster already. So if you had a Farcaster account in any time, you can go and do this. And there's a lot of potential that this might be something that all wallets start to use. Like, why not? It makes complete sense. I was told that I think the Ethereum Foundation is also working to build some of this. So they have some similar setup, but I think there are some differences. It's not ready yet to go like to everyone, but I think this is coming, which is something I never really thought about, but makes sense, right? We have it in Web 2 world for every account. No one would launch an account without a way to recover it, yet we do that every day with wallets. So will be interesting to see, that's just a first iteration. I'm sure we'll find more secure, better, different ways, but that's one of them, and something that's coming, which is definitely going to be needed for the next cycle, because the amount of people that lost their wallets previously is unbelievable. I mean, last week we talked about, was it like $60 million was not claimed for ARB tokens or something? And a lot of that's probably just people lost their wallets. And so if they had what Farcaster just created, they could recover them. So cool upgrade, and something that is definitely needed.
Yeah, it's amazing how the account management is probably the biggest issue. Wallet management is the biggest issue that we face, right? Like seed phrases, huge hurdle, right? We talked to one of the founders of Web3 Auth, who works with McDonald's on their programs that they've done in blockchain when they did their NFT drop about a month ago. And he said that when people have to create a seed phrase when they're signing up for a wallet, you lose 80% of your users don't convert. 80%. Like, that's how big of a deal just creating a seed phrase is. Not to mention, then you have to manage that seed phrase, as Kai said, and most people lose it. If I didn't have Kyle when I first onboarded into crypto, and he explained to me how I should write it down on a piece of paper and then buy a safe and put it in my house. Like, an average person is not going to do that, right? Like, they're not going to write it down on a piece of paper. That seems crazy, right? Like, that actually seems moving backwards. They're just going to put it in their password manager or something, which might not be safe. So anyways, it's great to see Farcaster and many others. We've actually got Privy coming on the podcast in the next couple of weeks, and we're going to talk all about how wallets are being managed in better ways in order to create great on-chain user apps.
Yeah, I think wallets, it's like accounts, right? We have so many accounts, and so it's hard to remember all your passwords. Same thing with wallets. We need ways to recover them. So pretty cool. What's going on with OpenSea? They got a new creator studio coming in?
Yeah, so it's been a while since we've talked about the NFT marketplace wars of 2022 and 2021, but they continue to rage, and Blur is losing these days. Blur was, last time we talked about this, Blur was dominating. Everybody was going over to Blur, and now Blur's down to just above 50% of the NFT market volume. And OpenSea sees an opportunity. They want to get back on top of this, and it's pretty clear that the way that they're going to do this, their strategy is to lean into creators. So just this week, OpenSea launched OpenSea Studio, or Creator Studio, which is a studio where no code creators can come and create NFT collections in very simple ways. So basically anybody can manage an NFT collection front end to end. You can do a allow list. You can easily upload your media or your metadata. You can build your drop page and do this all in simple ways, right? So it's very much for the average no-code creator, which is a big deal because in the past, we've worked on some NFT collections and helped them launch. And in the past, you had to make your own minting dApp, basically, right? You had to create a website that was set up to mint an NFT. That's freaking hard, right? Like you need two people, basically. You need a website developer and you need a smart contract developer. So that was very challenging. Well, OpenSea obviously sees that. So here's the 4 main things you can do in OpenSea Creator Studio. You can mint an NFT into your own wallet, very simply. So you can set it up, mint it into your own wallet. You can build on all OpenSea compatible blockchains, which there is many. All the main chains, main L2s and ETH are obviously on there. You can let collectors mint using debit card and credit card. That's obviously a key step. And of course, as I mentioned, you can launch it all with no technical skills. It's like a Shopify to set up an e-commerce store. Same idea. This is a super simple way to do that. So look, this is a big deal because there is going to be a marketplace that is the Amazon of NFTs. There's also going to be a lot of niche category specific marketplaces or white label marketplace, brand specific marketplaces, but there is going to be an Amazon, and OpenSea, I believe, is the best setup to do that. Blur is something else. Blur is the Bloomberg of NFT trading. It's for the speculators and the traders who are using this for financial gains, right? OpenSea is for the average Joe who just wants to buy an NFT and get into the digital world. And so OpenSea is, really going after that. I think this is a great move by them launching Creator Studio.
It is a massive product. I mean, it was not only difficult to find a developer to help you mint an NFT, especially back in the day. It's probably just as hard now. It's costly and it's dangerous. The amount of people that created contracts to mint NFTs that could get exploited, that did something wrong, that had, backdoors to them. Like it was, because not only did you have to create that contract and that minting process, you should also get it audited, but no one was doing that because it is extremely expensive to launch, to build a site, get a smart contract minting within that site, get it audited, pay the developer to do all that, plus the auditing company. Like it is a lot. And now it's free. So that's massive.
Totally.
I mean, and another thing of what we didn't have in 2020 that we have now.
Exactly. And OpenSea is also leaning into the understanding what do creators need beyond just like, this is like no code tools to set up and launch. But there's also like the protocol level of, okay, if you're building an NFT collection, what are you building it for? What do you need it to do? And one thing is redeemables is a big category of digital that we talk a lot about, that you get an NFT and then you can use that NFT to redeem a physical product, or use that NFT to redeem another digital product, or redeem a gift, or redeem, claim something in addition. And OpenSea is trying to lead that as well. And they have a current side team right now that is focused on basically creating the whole protocol around redeemables. So it's good to see some good stuff coming out of OpenSea. I haven't been so impressed with them in the last little while. So I'm happy to see positive news that is good for all creators. What's going on in restaurant loyalty and blockchain, Kai?
Blackbird is going on. So Blackbird is a on-chain consumer app that exists on Base that recently went live. Jesse Pollock talked about it a little bit at the Permissionless conference. And the founder of Blackbird, I'll explain what it is in just a second, but the founder of Blackbird is Ben Leventhal, who is also the founder of Resy, which is the reservation platform for restaurants. Sold it to American Express for quite a bit of money, and now had started this one, what Blackbird is basically like a loyalty rewards program for restaurants. And so think of it like an air miles or whatever for restaurants rather than airlines. And so the reason he started is that he noticed that there was a decline in the genuine connection between diners and eateries and then their customers, right? And if you think about it, it's because you don't call restaurants anymore, but you don't even book them through their own reservations. You typically do it through something like Resi. And as a result, you don't really speak to them much, right? And not only that, but that data is not shared with the restaurants. So the restaurants don't really know if you've been to the restaurant before, unless you happen to get the same waiter. And there's a lot of turnover in the restaurant industry. So oftentimes you're not getting the same waiter or waitress. So the data capture and like the connection of restaurants and those who attend restaurants has really gone to the wayside. And so this is an app that's going to, or is hoping to sort of fix that. And so basically what Blackbird is an app where restaurants can come on, they can add their restaurant to this program, and then users can use it to book and check into, I don't know if it's booking yet, but anyway, they use it to check in, say that they've been to a restaurant essentially. And as a result, what happens is they have a token called Fly, and that's their sort of rewards token. And so this token is paid out to people who use the app that attend restaurants, check into restaurants, buy things at restaurants, pay for things at restaurants. And then that Fly token is also given to the restaurants themselves for using the app. And in return, what this app is doing is it's basically taking the data of these customers, when their birthday is, what their favorite wine is, what they like to order, their favorite dessert, et cetera, and it's sharing it with other restaurants. And so people can go to any restaurant in, right now I think there's about 20 in New York and in Brooklyn. They're opening up in LA and I can't remember where the other,
San Francisco.
Yeah, San Francisco. So they're getting a bunch more restaurants, and it'll be a place where you can, go to any of these sort of like higher end restaurants, and the restaurants will be able to know a little bit more about you and can then give you better service. And then you can earn things. You can earn, there's different tiers that restaurants have. So if you've done certain things or you have enough points, you can get, a certain bottle for free. Or you can get a certain, reservation in a certain like nice area of the restaurant, or you can whatever, right? There's many different things that you can give away from this. So it's basically your rewards program, which is overall pretty cool, right? I think something that's needed. And now it's brought on chain. Why on chain? Well, the token, so Fly token, obviously can be used to redeem your rewards, redeem whatever it is, but you can also just sell it, and you can sell it to get USDC, right? So it's an open concept type of rewards, which is something that Jay and I speak a lot about and are quite bullish on. Now, there was a article in the New York Times where they explained this. They didn't mention crypto at all, but they explained what the Fly token does. And I just need to read this out because everyone who has an on-chain consumer app who's trying to reach the mainstream, this is how you need to speak about your token. It is beautifully said. So let me just read it. Each restaurant can determine its own system of rewards with tiers, a kind to gold, platinum, diamond, etc. Based on the number of visits. Additionally, on each visit, customers earn a certain amount of credit called Fly that can be spent at any Blackbird restaurant. In technology terms, Fly are native tokens, but for practical purposes, they operate just like credit card points or airline miles. Seems like a very great way to explain this to newbies who have no idea what a token is or crypto is, etc. Very just like a nice, presentable way, right? And it makes sense, right? Everyone knows what air miles is and credit card points. So that was really cool. Some other things that they're doing that are quite interesting in terms of just the technology around the app. One of the things they've experimented with is, so they have readers at the beginning, at the front of the restaurant. So as you walk in the restaurant, you scan to say, hey, I'm a Blackbird member. And then immediately the people at the restaurant know who you are. But the other thing that they've done is they've put chips in the tables. And so when you sit down at the table, you either usually put your phone on the table or it's in your pocket, which goes underneath the table. The chip can read it and know that you're a Blackbird member. It notifies the restaurant and says, hey, this person's here. Boom, sends them some tokens, sends the restaurant some tokens. And then it starts to tell you all the data about that customer. So you can walk in and greet them, hey, happy birthday, or hey, whatever. So really, really, really cool thing that they're doing to try to just bring better connection to restaurants and their customers. And of course, using some on-chain stuff to make it all happen. So really cool.
Yeah, it's amazing. I think that we talk so much about loyalty being one of the best use cases for blockchain. And the thing about restaurants is, because restaurants is this like fragmented industry where it's all these individual restaurants, most restaurants don't have loyalty, right? They have literally zero loyalty. The only restaurants that do have loyalty are like the major chains. That's few and far between. Right. So this is a great opportunity to provide loyalty to an industry that doesn't really have it by doing it, by offering a rewards program that's simple to use for any restaurant when they sign up. And they, as you said, Kai, they can set it up however they want. They within like guardrails, like bowling with bumpers, right? Like it's like stay within the lane. So that's great. And then the other thing I think is so great is we know that incentives drive behavior, right? We've seen that over and over again with NFTs and with crypto. And now you take that to restaurants. So if you're a restaurant and you want to incentivize more people to dine at your restaurant, well, what better way to do it than to give them an incentive of tokens, points, whatever you want to call them. And that's going to lead people to come back or to get a free drink or whatever it might be. But you can do this in such a simple way in this Blackbird app.
By the way, I think the reason we're talking about this, I don't even think I gave the headline of this story, which is that
You didn't actually.
The reason we're talking about is that Blackbird just raised $24 million. We completely missed that. And it was led by A16C. But the other cool thing is the other investor, American Express. So I don't even know I'm sure they know, but American Express is investing in a crypto company, which is quite interesting. But yeah, really, really cool, I think, what they're doing. So very interesting.
Love to see it. Okay, let's go to the hottest court case of the week. Sam Bankman-Fried, his trial started on Wednesday, and we want to keep you guys updated on what's going on with this. So Sam faces 7 criminal charges related to the collapse of FTX. And one of the U.S. attorneys called this the biggest financial frauds case in American history, or one of the biggest in American history. So a lot of eyeballs are going to be on this. This is going to set a lot of precedent in the American judicial system. And it actually might set a lot of precedent for regulation as well. So this is a lot. It's important to follow this. And it's also, I don't want to say this is fun. It's never fun when people use billions of dollars, but there's just it's just such a ridiculous story. Like, it feels made for TV. And SBF, who's only 31 years old, faces 110 years in prison if he's convicted for all of these charges. So this is no joke. So let me just give you a couple of the rundown of what's happened so far. We're 2 days into this trial. The DOJ has asked to seize 2 private jets that were used by Sam Bankman-Fried, apparently purchased with FTX money. That shows you how ridiculous this FTX whole thing was. They were buying private jets with their money. Like, why do you need to be buying private jets? So unnecessary. One of the key arguments that SBF's lawyers have presented is that there's no regulation. So they've basically said, hey, Sam didn't break the law. There is no law, right? And the DOJ has basically said that no regs is not an excuse. And they wrote a formal letter about why no regs is not an excuse. But basically what the key line here is that they said the funds were misappropriated. That's all that matters. Fraud happened here. So who cares whether there's regulation or not?
Doesn't matter about the industry it was in. Either way, it was value that was misappropriated.
Exactly. The jury has finally been selected. They were going through jurors. One of the things I noticed that they did was they asked any jurors, have they ever lost money on crypto? And any juror that raised their hand, they were like, okay, you're out.
Oh.
SBF has sued. You might have seen this. It made a bunch of headlines. He sued FTX's insurance company. You can't make this up. 2 months before the FTX collapse, they took out an insurance policy if legal claims were ever brought against the leaders of FTX, obviously, Sam Bankman-Fried being one of those, so that if legal claims ever came against him, he would be covered for the legal fees. And obviously, the legal fees for him, it's already in excess of $10 million, and the insurance company is refusing to pay for it. So now there's this lawsuit going on the side. Sam Bankman-Fried's lawyers do not want FTX customers to testify. No surprise there. But obviously, the DOJ wants FTX customers to testify because they lost money and they got fucked. And so, like, they want to hear those, heartbreaking stories of everyday people who lost money. And the final thing is that Sam Bankman-Fried, if he asks this all the time. Every week he asks if he can be let out of jail. And every week they are like, no, you can't be let out of jail. You must stay under lock and key throughout the duration of this trial, which will probably take up to 6 weeks. And we'll continue to keep you guys up to date on everything that's going on.
Let me ask Jay, do you think he gets off, or do you think that he goes to jail for 110 years or somewhere in between?
I don't know if I'm like legally capable of
No, this isn't legal advice. If that's
I definitely don't think he gets off. He's going to jail. He's going to jail for a long time. Is it 110 years? Probably not. It's probably like somewhere in the middle. But like this guy's, he's screwed. Like if you're America, it's pretty clear that they want to regulate crypto and that they are behind the ball. So you've got an opportunity to make an example of somebody like this who clearly frauded billions of dollars. Like you make an example of it.
But there is a lot of talk that he's like in the system. You know what I mean? Like they got him to do this to make crypto look bad because of his parents' stuff. So it's like, I don't know. When you're talking with people that are rich and in politics in the US, anything can happen.
Crazy.
It would, I don't know. Crazy. I don't know what's going to happen there, but
God, I hope not. All right, let's keep rolling.
Like Sam Bankman-Fried, by the way, is that an NFT or was that like an actual sketch from the court case?
This is the sketch. You know, like you're not allowed cameras in the courtroom unless it's the Amber Heard and Johnny Depp trial in Virginia, because some states allow cameras, but yeah, they don't allow cameras.
They made him look pretty badass. That doesn't look like him at all. I wonder if that's
he does look badass. He doesn't look like a little pipsqueak in this in this sketch. Okay, let's move to some news coming out of some big apparel and consumer goods brands. Nike, Swoosh launched something this week. Diesel and Fossil have collabed, and Adidas and Moncler have collabed. So let me break these down for you. First, starting with Nike, their blockchain program, Swoosh, of which many of our community members are part of. Kai, I know you've gotten some NFTs as well, even though you don't have a Swoosh. You backdoored in through a friend to get in there through Candy, one of our community members. And Swoosh has launched their first shoe. So this shoe, which is appropriately called TINAJ, Nike TINAJ, which means this is not a JPEG. And so this pair of shoe is being released on October 20th to anybody who has a Swoosh and has also revealed at least one Our Force One box. So if you've done those things, then you are eligible to purchase a pair of these shoes. They're going to be sold for $120, and you can do so on October 20th. So cool news coming in at Nike. I'm going to keep rolling, and then I'll give you a chance to jump in on all of these programs. The next program is Diesel with Fossil. So two large brands, two apparel fashion brands have combined on a watch. And what they're doing here is they're selling this watch, which is very limited. It's only 300 pieces. As we keep saying, most companies that are doing stuff in blockchain, most of these large companies are doing in very small batches. So it's more experimentative right now. But there's 300 watches. And when you buy one of these watches, it comes with an NFT. Now, here's what's interesting about this NFT. It's not just an NFT to prove the authenticity of your watch. It's also an NFT which you can then use to claim an avatar. And when you claim that avatar, your avatar starts off as a blank avatar, and you go through various experiences in what is Diesel's basically metaverse world. They're calling it the Diesel's metamorph, their virtual realm. And you can create an avatar in their virtual realm, but you can only do so if you buy this watch. So if you're a big Diesel fan, which I'm sure there are many of, they're probably going to want to be the first to create an avatar and be part of their digital realm. So that's what's coming out there out of Diesel and Fossil. And then Adidas launched a partnership with Moncler. Moncler is one of the largest fashion brands that focuses on outdoor activity in Europe. So hiking and skiing. They're really big in like ski jackets, outdoor apparel, and very high-end stuff. Like their stuff is thousands of dollars, not cheap stuff. And they've launched today, I believe it's today. So this is Thursday. You guys are listening to this on Friday. Adidas and Moncler launched a full collab of an apparel collection. There's like socks and there's shoes and jackets and sweaters, all this stuff. I was looking at it today. A pair of boots were like $1,000, right? So it's high-end physical goods. But here's what's interesting. Along with this launch of this physical collection, they also launched one digital NFT, And they did that to the Adidas alt community. Adidas alt is Adidas blockchain community. So if you have an alt, you can claim a digital version. I've got it up on the screen here. You can see it, Kai, a digital version of these shoes, which who knows what the utility of them is. There's a lot of speculation that Adidas is leaning into the metaverse long term, and they believe that we will all want to wear the same things in the metaverse that we wear in the real world, IRL. So they're starting to drop these digital wearables. Right now, you can't wear them anywhere. There is no metaverse you can wear them. But if you are an alt holder, you can go claim. They're limited to 3,000. And I think that the Adidas alts have different traits. And so if you are a drip holder, it's one of the traits. I think either you get first access or in some way you get something special as a result of being a drip holder. So 3 different brands all doing, well, actually 5 different brands all doing interesting stuff around blockchain and physical goods.
So I think first, all really cool. Love seeing the experimentation from, such Nike, Diesel, Fossil, Adidas, etc. Here's the thing that I think is really cool about this, and we're going to see more of, is this connection of physical items, luxury and not luxury, but moving them into digital world. Same with this is what Pudgy Penguins does, right? You buy a physical toy, I think it's $9, and then you can scan a QR code, and all of a sudden you have this digital badge that allows you to enter their game or whatever they're going to build there, right? I think every physical company is going to do this. Why? And this is what Fossil and Diesel are doing with their watch. Now, why would you want to do this? Well, when someone buys something in the physical world, you don't have any data on that person. You can't remarket to that person unless when you go to the cash register to buy, you're like, hey, can you give me your phone number? Can you give me your email? And then they can email them. They can send them some emails, which that always goes to your spam. So it's basically useless. I don't even think a lot of companies really do that so much anymore. Pretty much useless. You could take that email, upload it into Facebook and Google, and you might be able to remarket them that way. But there's a lot of changes in how Apple works and how others are working that are kind of getting rid of that or making it less effective. So ultimately, you really as a business get one shot. You sell them on it. If you don't upsell there, you're just hoping they come back. Maybe they follow you on Instagram or something like that, or on Twitter. What it does when you say, hey, you bought this thing, go scan this QR code, and all of a sudden now they have an NFT that plops into their wallet. Remember, what that is now they've entered the global database of Ethereum. Remember, Ethereum is a global database, right? That you join one time with your wallet or your account, whatever you want to call it. And now everything you do is in that one database that's shared with the whole entire world, right? Doesn't matter if you're buying things, if you're playing games, if you're speculating things, whatever you're doing, it's all in that global database, right? So it costs nothing for a business to have that database. It just exists in the world. And if you can tag a customer and say, hey, that person has shown interest in something that I've done into that database, you now know so much more about that person and can hopefully remarket or retarget them in some fashion. Now, we don't really have a lot of those yet on the blockchain, but we will get there. But it's more about data. And so it just makes complete sense that every single company that has any physical good is going to want you to attach that thing to your wallet, right? It's going to be the most important thing for everyone to do. Just like in the last 20 years, the most important thing was get someone to follow my Facebook page or Instagram page or my Twitter account. That was the most important thing. Now it's going to be make sure that you tag their wallet. We need to know who that person is in that global database. And so I think what we're seeing with Diesel and Fossil is instead of just scan this QR code and there's an NFT, no one is going to actually do that. You'll maybe get 10% of people that will convert, if that, right? But they need to create an experience with it. It needs to look cool. It needs to give them more utility because the conversion rate from just giving, hey, here's NFT, which people are going to eventually know that's just a tracker, basically, right? They're going to say, it needs to be, here's NFT that does this, that gives you access to this, that, you know what I mean? There has to be a reason why some are doing it. Pudgy Penguins is scan this thing, not because it's NFT, scan it because it gets you access into this world to go and have fun, right? Fossil, Diesel, scan this thing because you're going to get this thing that looks cool and probably gives you access to XXX. So you're going to find a lot of creative ways where people are going to sell physical goods and then give you an experience or access online, not because they necessarily care what you do there. It's more just because they want to tag you so that you're tagged inside of that global database. That's what
and inevitably where it goes is the ability to reward your biggest customers. right? So sure, you buy one product, like great, you get access. That's the first step. But you can imagine in the future, all of these brands we're talking about, Nike, Adidas, Pudgy Penguins, whoever, say, oh, you bought 10 of our products? Well, now you get this, right? Yeah. You get access to something special. You can imagine that with concert tickets. You can imagine that with really any good. And here's the thing, you cannot do that without blockchain. You cannot track the data and then reward your customers in an easy way without blockchain. Sure, you could try to do it with like a Web2 database and email, but it would be a goddamn nightmare and everybody would fraud it, basically. So,
and you also couldn't open it up to other things as well, right? You could build your own database and do it with your own experience, but then you can't get what else they're doing, right? And reward them for other things that maybe are partnerships with other brands or give access with other brands and rewards from other brands. So it's a massive change.
All right, let's go to our community member of the month. Shout out to KryptoShrimp PhD. You are the community member of the month. Michael is KryptoShrimp, and Michael has just been an absolute gem of community since the beginning. He's very active in our Discord. He himself is a great builder. I think you met Michael recently, didn't you, in person at Permissionless Guy?
I did at Permissionless. I was in line at a taco place meeting up with someone else. And all of a sudden, KryptoShrimp, who obviously I don't know because his name is KryptoShrimp in Twitter and Discord, and his image is, I think it's like an NFT or something like that. So all of a sudden he opens up the door and I'm standing in line and he goes, Kyle. And I just looked down and I was like, I don't know. And he's like, it's KryptoShrimp. That is the funniest entrance ever. But yeah, I met him. We went for a beer and actually gave him one of our on-chain hats. So it was great to meet him. We had a great time.
You're just teasing our on-chain hats. We haven't publicly announced this yet, but we got merch that we are making, everybody. I'm actually wearing our t-shirt right now. If you're watching this, I'm not going to show you the whole t-shirt. You can only see the top. So it's a little bit of mystery still. But we're making merch and you're going to be able to win this merch or purchase this merch. But most excitingly, you'll be able to win this merch. We're launching something really exciting next week. So keep your eyes out. Something is coming from Web3 Academy that's going to give you prizes and hook you guys up for all your activity on chain because we want to celebrate you on chain.
Love that. Back to Michael real quick though. Michael's in the, I don't know exactly what you call it, but science world. I think it's like bioscience type world.
DeSci or?
Well, so he is in that too. I'm going to get to that. But in his normal non-crypto life, he's in the science world. And so he's really gotten into DeSci as well as a result of that. And he's actually thinking about writing a newsletter on DeSci to help people navigate that space and understand what's going on. And I was like, please do that. I would love that. So if you're listening, KryptoShrimp, please do that. And for those that are also listening, his Twitter is at crypto with a K, shrimp PhD. Tell him to go and create that as well, because we all want to stay up to date in the DeSci world.
And if you want to learn about DeSci, Kai probably doesn't even know this because he was on vacay, but next Wednesday, we got an episode dropping from Aaron from Athena DAO, which is a leading DAO in DeSci. And we're talking all about how they are using crypto to change women's health and improve funding for health experiments and health research, all focused on women. Incredible podcast. DeSci is going to really change the world, actually. That's a big one.
Really cool.
For sure change.
It's a lot to wrap your head around. Like he was talking about tokenizing molecules and stuff. And so like some people are like, wait, what? But it is really interesting what they're doing. And the more it becomes to life, they have more examples. I think people will be able to wrap their head around it more easily.
All right, let's do some quick hits before we wrap here. Keep them short. Kai, hit me with the first one.
Ledger and Sotheby's, another partnership.
Yeah, Sotheby's, which is one of the leading art auction houses, one of the oldest art auction houses in the world, over 100 years old. They've dove into crypto, Web3, NFTs because they think that art on-chain is better than art off-chain. So they launched the Sotheby's Verse, which is their NFT marketplace, where they curate leading NFT artists and have auctions on a regular basis. And they've now just launched a partnership with Ledger. So if you purchase a piece of art on Sotheby's Verse and you are one of the top, not all purchasers, but one of the top purchasers, then you will receive a co-branded Ledger times Sotheby's Ledger. You'll receive a co-branded hardware wallet just especially for you. Definitely the digital art collection. Digital art use case for blockchain is huge. And if you own art that you're buying on Sotheby's, you should for sure store it on a hardware wallet. Okay, next up, Stars Arena, yet another FriendTech copy, launches on AVAX.
Yeah, so this one's, somewhat taken off. They've got, close to, I think, 10,000 daily active wallets for the first time just the other day. It's starting to take off. We've talked about this. There's lots of forks of FriendTech, which is great. This is what allows for innovation. Competition pushes people to be faster, more urgent in what they're doing. It allows us to keep experimenting from different angles, and then you can take what works and let go of what doesn't work without having to do it yourself. So that's really cool. I think so. The difference with Stars Arena versus FriendTech is more focused on like the social side of things, which is to say they have a feed. And so you don't have to pay and buy keys to see all posts. You can just see any posts, but then if you buy keys, you can see hidden posts, more like premium or pro type posts, which is basically what Twitter has, right? Where you can see a feed of people's free posts. And then if you subscribe, you can see other ones. So like these forks are starting to look like people are like, yeah, this is great. They're focusing on social, but it's like you're just recreating Twitter and you're not going to be better than Twitter. So what's the point, right?
But you can't speculate on Twitter, Kai, and speculating is fun.
That's true. Okay, that is true, actually. Great way to put that. I like that. I guess that's the one thing. So wait, with Stars Arena, you're also, I guess you're not just paying for a pro like paywalled, you're also specking out like a key of FriendTech. Okay, that makes sense. Yeah. Okay, I could see that. But you know what's going to happen? Twitter's going to do it. Well, X is going to do it
for sure.
At some point. Although maybe not actually, because regulation, they wouldn't be able to.
True.
Like there's no way they would do it anytime soon. So it actually gives a bit of room for things like FriendTech and Stars Arena to like gain some traction before Twitter can even think about doing it. They'd have to go through so much legal stuff.
I thought you said what you were going to say is, what's going to happen is most people are going to get wrecked, because that is exactly what was going to happen to most people on FriendTech.
Yeah. I'm not a hater of FriendTech by any means, but people are already getting wrecked. Unfortunately, there's a lot of SIM swaps happening and people, hacking to someone's account and then selling all their shares and screwing over.
People are getting wrecked from hacks. They're just going to get wrecked because when you speculate, there's winners and losers. And
yeah, of course.
There's a lot of people who lose, and there's usually few people who win, right?
Right.
Okay, let's go to the next quick hit,
which is MoMA. MoMA? Is that what I said? MoMA postcard.
Yeah.
MoMA postcard. What's this?
MoMA, the Museum of Modern Art, one of the leading museums in the world, has launched a NFT project. We've talked a lot before about how NFTs and digital art are coming to museums. We just had the ApeCoin DAO pass a vote to take $12 million to purchase Bored Ape Yacht Club NFTs and put them into museums. So we're seeing more and more happen here. And MoMA has launched a project, which is pretty cool. So basically, this project, it's a postcard with 15 blank stamps on it. And these stamps are designed collaboratively as it moves from one artist to the next. So basically, one artist starts with this postcard of blank stamps and they design each of the stamps. And then they move it to the next artist, and then the next artist adds some design. So it's a collaborative, it's basically generative art, except generated by 15 different artists. And it features some top Web3 artists. Grant Yoon, Dmitry Cherniak is the one who made Ringers, Casey Reese, Operator, and many others. So really interesting to see. MoMA isn't just bringing digital art into their museum. They're actually also participating in the on-chain creation of the art. All right, next up, the SEC denied a court appeal.
Yeah, this is a nice little win. So back in, I think it was August, Ripple won a case against the SEC for their token sale on centralized exchanges to retail investors. It was called a security. It was deemed not a security from the court. That was a big deal. People were pretty pumped up. A week later or something, the SEC asked for an appeal. And so this just went through discussion with the court, and the court has decided that they are not going to allow them to appeal this. And so that means the way that Ripple sold its XRP token to retail investors was not considered a security. So that is really cool. There's still going to be a case going on, which is they still found, or they're still undecided on if the institutional sale of XRP was considered a security. So they still have to figure that one out. But at least to retail investors, we're all good. No appeal. So this is actually pretty big news that didn't really go very big on Twitter, surprisingly. So a win for the industry, that's for sure. All right, last one, and we shall wrap it up. This one's a fun one. Tom Hanks says that AI version of him used in a dental plan ad was without his consent.
Yes. So we keep hearing about the dangers of AI, deep fakes. This is a real problem. And here's an example of that. So earlier this week, Tom Hanks went to Instagram and posted a screenshot of an ad of himself, and it looks just like him. Like, you or I would never know that it's not Tom Hanks. And it's him talking about a dental plan and saying that consumers should go buy this dental plan. Well, here's the thing. This company did not have Tom Hanks' approval, and it's not even Tom Hanks. They created this using an AI version of Tom Hanks. And so he's obviously pissed because he's like, you're using my likeness, you're using my character to promote your brand. That's illegal because you do not have my permission. And obviously customers are getting screwed because they're like, oh, I trust Tom Hanks. Who doesn't trust Tom Hanks? Man, he's Tom Hanks. I fucking love the guy, right? He says I should go to this dental office. I'm going to that dental office. Keep my teeth nice and shiny. Look like just like Tom Hanks. I am in, right? So this is why, look, yes, this points out the problem of AI deepfakes. Here's the solution. That's what I want to focus on. For verified identity on chain. This is why AI is going to expedite the need for blockchain across really the entire world, because we are going to have so much more fake content like this. It's just going to explode in the next year. And the only way to solve this is by verified identity, so we can easily see, oh, this was created by Tom Hanks. Or
I see ads all the time of Joe Rogan that I know are deepfakes. I'm like, I know he did not say this about like selling supplements or selling like different random things. And I'm like, that's not actually him. And you can kind of tell if you really look, because the mouth moves a little bit weird. But I see them all the time, almost daily. It sucks.
So scary.
Easy fix.
Easy fix. Unstoppable domains, ENS, whatever it is. Get everybody here, you guys should have your verified identity on chain. Don't just have your verified identity be your wallet address, 0x, blah, blah, blah. Set it up with some sort of a domain name to actually show who you are, and we can start to use that. You'll see more and more tools, I believe, coming out in the next year around that. That's a wrap. Thanks so much for listening in, everybody. Have yourself a great weekend. We'll see you next week.
Thank you for listening to Web3 Academy, your one trusted source to capitalize on the next big phase of the internet. If you enjoyed this episode, please share it and subscribe or follow so that you don't miss the next one. While you're at it, there's a link in the description for our free newsletter where we provide timely and relevant Web3 insights so you can confidently build and invest in Web3. Make sure to subscribe today. One final note. This podcast is for educational purposes only, and nothing we say is financial advice. Crypto and Web3 are risky, and you should never invest more than you're willing to lose. Thank you, friends, and see you in the next one.